Hey guys, this is Sandy. I have not made a video in a long time, right? I'm a licensed realtor here in Central Florida as well as a licensed lender. And today I want to cover a topic on DSCR loans. I know a lot of people have been seeing it. If you're looking to invest, you have been hearing the term DSCR. What does it mean, right? And so I want to do a topic on that today. So debt service coverage ratio is what DSCR stands for, okay? And it is more practical to use it for investment properties. That's what it was made for. The beauty of a DSCR loan is you can close on the property in an LLC or in a trust, which is awesome. Another thing about DSCR is once you have the credit to qualify, which I believe is 640 or higher, then the property is what qualifies for the loan. So they're not going to look at your debt to income ratio. They're not going to look at any of that stuff. They're going to pull your credit to see where your credit score is. And they're going to use the property to qualify the mortgage. What does that mean? Let's say you're buying a property for $350,000, right? And it has a potential rental income of $3,000 per month. The $3,000 per month is what they're going to use to qualify the property to see if you could buy the property. So when the appraiser goes out to appraise the property, they're going to also do a rental appraisal. And they're going to want to look to see if the $3,000 per month is the area rent. So they're going to look at the similar homes in the neighborhood that you're buying the home in, and they're going to see they're going to look at what those are renting for. You could use that for long-term renting or for short-term or Airbnb renting. They're going to be qualifying it that way. If the market value of $3,000 a month makes sense, like the appraiser went out there, they did a rental appraisal, and yes, the market rent is $3,000 per month, then you get qualified for the loan. Now, let's pretend that the mortgage rent that you told about the mortgage rent was $3,000 per month, but when the appraiser went out there, it ended up being $2,500 a month. You're still going to qualify for the loan, but the interest rate will be higher, right? Because they're looking for a certain ratio, which I don't want to confuse you with right now, but they're looking for a certain ratio. They want to make sure that the monthly mortgage is going to support the monthly rent. So that means that in the example I gave, if the market rent is $3,000 per month, right, and your mortgage with your HOA insurance and taxes, if that is $3,000 or less, then that property is a good candidate for DSCR. And I hope that makes sense. You can always call or send me a message for more explanation. But that's kind of what they're looking for. So when you go out looking for investment properties, whether it be for long-term renting, for Airbnb, whatever it is, make sure that the market rent is supported. So don't just go to a property and say, hey, I could probably get $3,000 a month for this, right? I could get it. Make sure that other properties or other investment or homes in the area are being rented for the same price that is similar to the one you're going to buy. So if you're doing a 4-bedroom, 3-bath, make sure other 4-bedroom, 3-baths in that area are actually renting for $3,000 per month or more, right? More is better. Because in the same scenario I give, let's say you told the bank, you know what, I think I can get $3,000 a month for this home. And when the appraiser went out there, we actually found that you get $3,500 a month for the same home. And then your debt ratio, which means your monthly mortgage payment, your monthly taxes, your monthly insurance, your monthly HOA, is less than that $3,500 or even less than $3,000 because that's what you told them initially. So let's say that came out to be $2,800. Then you're going to get the lowest interest rate on the DSCR loan, and the property is going to really qualify because it's below the debt ratio. So the debt ratio that you're talking about is your monthly debt on the property, meaning the mortgage, insurance, HOA, and taxes. That monthly payment, they want it to be less than what the mortgage would be. They want it to be less than what the rent is. Of course, you want it too, right? Because if, as an investor, you're buying a property, if your monthly mortgage payment, insurance, and all that great stuff is $3,000, you definitely want a property to be renting for $3,500 or more, right? Because then that's what it would make sense. It would not make sense for you to take on a debt ratio or a debt service of $3,000 a month, and you can only get $2,800 a month in rent for that property, because then you're going to have to put in the rest, not to mention wear and tear. Because when you buy investment property, you also got to think about maintenance. A lot of investors will put 5% of the rent away each month in preparation of what might come down the line. You can also get a home warranty insurance, and I love these guys. A home warranty insurance is great because that helps to alleviate some of the maintenance problem. And if you don't know what a home warranty insurance is, it's an insurance that insures the equipment in the home. The stove, microwave, dishwasher, washer dryer, air conditioning system, heating system, doorbell, pool equipment if you have a pool. All those things are covered under home warranty insurance. So I would always suggest, if you're an investor, that you always have home warranty insurance. Now, there's sometimes when it doesn't come into play. Like a good example would be, let's say you're renting a home and the tenant called and said the AC is down. And you call the home warranty company and they tell you, okay, we could get a technician out there in 3 days. And the tenant is saying, I can't wait 3 days, I'm burning up, right? It's going to be a your call, because in Florida, air conditioning is a luxury, believe it or not. It's not a necessity. So it's not like the tenant could report you saying, my landlord isn't giving me AC because it's a luxury, believe it or not. That's the rule in Florida. So, but you're a nice person and you don't want your tenant to be out of air conditioning for those 3 days. So you probably want to fix it yourself before the home warranty company gets there. There are going to be situations like that, and people debate this all the time. Well, I don't want a home warranty insurance because if I call them, they're not going to come. They do come, sometimes based upon the time of the year it is and how much their technicians are out. Sometimes they may not get service immediately. However, there's one company that we use, and that company allows you to choose your own contractor. So you could choose your own plumber, electrician, whatever it is that work you need done. You call the company, report the stuff. They're like, okay, how soon can you get your technician out there? Technician goes out there, report back to the company how much it will cost to fix, and they cover it. Of course, there's a deductible, and it depends upon the plan that you pick. But this is not a warranty insurance, so let's not go too deep in that with that in this video. Back to DSCR. So if you are an investor, or you want to become an investor, or you want to invest in rental properties or Airbnb properties or whatever you want to invest in, a DSCR loan would be a great way to go because there's not too much qualification. All you need is a good credit score. After that, the property would qualify itself, right? So you go to the property, you run your numbers. If the numbers work, then DSCR would work. Another question is, how much money do you need to as a down payment? The down payment is going to be 20 to 25%, guys. Most DSCR loan programs I've seen is between 20 to 25%. So that's what you're going to look at. Now, this is called a non-QM loan. And what that means is it's not insured by Fannie Mae or Freddie Mac. So DSCR loan doesn't have to follow the Fannie Mae and Freddie Mac guidelines. What is the Fannie Mae and Freddie Mac guidelines, you ask? Fannie Mae and Freddie Mac basically controls a lot of the residential market. And a lot of times when you go to the bank and get a loan, the bank is going to get a loan from Fannie Mae or Freddie Mac to give you the money for that mortgage. Now, because the loan is coming from Fannie Mae or Freddie Mac, or the bank may want to sell it to Fannie Mae or Freddie Mac, they have to follow Fannie Mae and Freddie Mac guidelines. So they have certain guidelines, like the loan can't be over so much. You got to have this much credit score. Your debt to income ratio can't be this much. All those guidelines is what the bank is going to have to follow in order to be able to either, one, get money from Fannie Mae or Freddie Mac to give you the loan, or to give you the loan and be able to sell it back to Fannie Mae or Freddie Mac. Fannie Mae and Freddie Mac operates on the secondary mortgage market, which means your bank is on the first market, right? So they're going to give you the mortgage. But in order for the bank to keep making money and keep giving loans, they have to replenish all the money that you're lending out. So if they're lending you $200,000 as a mortgage to buy a home, they want the $200,000 back. In order for them to get that, they're going to give you the $200,000 loan. They're going to go to Fannie Mae or Freddie Mac and say, hey, I have this loan for $200,000. We want to sell it to you on the secondary market. Fannie Mae, Freddie Mac buys it from them, so now the bank have the $200,000 again to lend it back to somebody else. The DSCR loan doesn't work like that, right? It's an investment loan, so they're not going to sell it back. So it has different qualifying stuff, and that's why they don't have to follow Fannie Mae and Freddie Mac guidelines. This is the reason why the property is what qualifies for the loan. They do sell the loan, but not the Fannie and Freddie, right? And that's a whole other different video too. So I don't want to make this video too lengthy. Hopefully you gathered some information on that. If you're thinking of buying investment property and you want to consider a DSCR loan, you can give us a call, 845. No, that's not the number. I'm sorry. My God. Give us a call, 407-791-4713. You could call or text us. We should have information at the bottom of the video and also on the screen somewhere. You could call or text us if you have any questions, because DSCR loan it's a lot of questions, a lot of moving parts, and it's hard for me to cover it in one video, but it is a great way to start acquiring investment properties. Thank you so much. I'll see you in the next video.